Are you also a fan of using mobile payment apps? People have a constant yearning for convenience, which makes today's payment apps such a win for everybody because in just a few clicks, you can send or receive money straight away, no fuss and no paying taxes. Well, until a new tax rule came to town, so we've come up with this video to let you know about the new 2022 tax rule and how it affects your money if you receive it through modern cash apps. In older times, receiving or sending money to a friend can only be made possible by personally handing out the money to them. While the line "cash is king" still holds true today, with payment apps, you are always promised fast and reliable transactions like no other. If you are wondering whether you'll be hit by the new tax rule or not, this video holds all the answers to your questions. So if you're ready, come and join us in this short video and discover how the new 2022 tax rule affects you when you use money apps like Venmo, Cash App, PayPal, and more. So stay close watching. Right before we get to know this new tax rule, let me welcome you first to the Finance Mama channel, where you can discover all the best and most updated information on how the new 2022 Cash App tax rule affects your money. Smash the notification bell and hit the subscribe button to be updated on all the latest personal finance videos from us. Don't forget to give us a big thumbs up if you love this video and leave us a comment below if you know any other personal finance tips you'd like us to show you on our future videos. As the new year starts, a lot of talks have been circulating in the town about this new Cash App tax rule. I bet you might have already heard about this new act, but maybe you're still in the process of asking yourself some very important questions such as, how does this tax rule really work? Who does this affect the most? And most importantly, am I one of those who will get affected by this new act? So to put an end to what seems to be an endless confusion, let's find the answers to your questions and get to know this new 2022 tax rule better, as well as understand how this will truly impact you and your money. So, how does this new tax rule really work? In this new 2022 Payment Apps Tax Rule, it states that if you acquired a total of $600 or more in a year through the use of payment apps or peer-to-peer payment applications, this information will be communicated to the IRS, which will almost immediately send you a 1099-K form and be required to file taxes for the money you collected. This new tax rule became the talk of the town because of how drastic the change this brings. It was originally stated that you will only be sent a 1099-K form and be required to file taxes once you receive a total of $20,000 and have accumulated 200 transactions as such. So, to go from $20,000 down to a $600 limit makes such a huge difference for everyone who uses these payment applications to receive or send money. Now, who does this new tax rule affect the most? If you're someone who receives money through payment apps for selling goods and services, then you're definitely one of those individuals who will experience the effects of the new payment app tax rule. If you're using these online applications to receive money from different individuals specifically for personal use, then these transactions belong to the non-taxable category, and even if you exceed the $600 limit, you won't have to pay for taxes. So, this means that if you're someone who's getting paid by cleaning houses or by tutoring your neighbor's kids through these payment apps and receive $600 or more, then you will be receiving this 1099-K form and you will find yourself filing taxes for this money. The same thing goes if you're selling stuff like scented candles, decorative cups, or earning any kind of small business, you will still have to file taxes for these profits if they hit or go beyond the $600 mark. On the other hand, if you are receiving money through these different payment apps such as Cash App or PayPal in the form of donations from various charities or car loans, then your money is safe from being affected by the new tax rule. You can also put your worries to rest now if you only use these payment apps to receive money in the form of monetary gifts or as reimbursements, because as long as these transactions are all made for personal use, they will remain untouchable by the new 2022 Payment App Tax Rule. We're about to show you the most important info. It will be great to give us a big thumbs up to let us know that you love this video we made for you, and don't forget to smash the subscribe button to be our subscriber and gain more exclusive personal finance tips from us. The next important thing you need to know is what payment apps are included in this new tax rule. A peer-to-peer payment application, or what is commonly called a P2P payment method, serves as electronic money transfers that allow people to send as well as receive money from each other over the internet. Many articles are circulating online as to what apps are part of this new tax rule, and while some articles are giving information that is helpful enough to throw light on the situation, there are also articles with inaccurate details that only bring more confusion. There are 5 apps that are part of this new 2022 tax rule that affects your money, and all of these apps are the top payment applications used by many to make fast online money transactions. These payment applications are PayPal, Apple Pay, Cash App, Google Pay, and Venmo, which is also owned by PayPal. These are the only apps that may be sending you a 1099-K form if you receive a total of $600 or more through them in a calendar year. So if you're using a different app like Zelle, then you can now relax and stop worrying because this payment app company has confirmed that they are not included in this new payment app tax rule. They will not be sending you any kind of form, and you don't have to file taxes even if you go beyond the $600 limit by using their app to send money to your kids or any family members, or receive payment from the people who borrowed money from you. Now that you already know how this new payment app tax rule works, what applications are included in this new rule, as well as who this new tax rule will impact the most, it's time to talk about how the government will figure out when to send you the 1099-K form and whether the transactions made through these payment apps are for selling goods and services or for personal use. So this is how it works. The payment app companies have clarified that this law only covers transactions made through a business app's account and will not apply to personal payment apps accounts. So if you are someone who is using this app with a personal account, you will not be receiving a 1099-K or any kind of form even if you received or sent more than $600 of money. However, if you are someone who uses a business-type account, which would mean that you are selling goods and services and you are accepting profit through the apps mentioned above, then you will be receiving the 1099-K form, be reported to the IRS, and will have to file taxes for these profits that you earned. It's important to figure out which side of the coin you belong to as early as possible when this new tax rule that affects your money takes effect. Doing this will help you in being more prepared and know what exactly you need to do in case you will receive a 1099-K form in 2023. How about you? Are you also a top user of any of these apps? Will your profits also be affected by this new payment app tax rule? We'll wait for your answers in the comments. Please give us a like if you enjoyed watching this video and learning about the new 2022 payment app tax rule. Please subscribe to our channel and smash the notification bell to score all the latest updates and uploads from our channel. This is your one and only Finance Mama, and I'll see you again on our next personal finance videos. Bye!